Hello, everybody. I hope you guys are having a fantastic day and you didn't get completely obliterated and decimated in today's market trading. Today, we did get our CPI numbers. I covered it live earlier today. And yesterday, we got our PPI numbers. The PPI is the Producer Price Index, or the business inflation, the wholesales inflation. And today, we got the CPI, which is the consumer's inflation. Yesterday, we were expecting 0.2 inflation. We actually got 0.4 inflation. And today, we were expecting 0.3 inflation, and we actually got a 0.4 inflation. The scariest part is not that the inflation went up. This is the scariest part. Literally in the CPI report, and I'm going to read it in just a moment, they said what offset the crazy inflation is actually a reduction in energy. The reduction in energy is a reduction in gas prices. And that reduction is starting to be diminished from the last time and the report before that. Natural gas is going up, electricity is going up. Gas prices will start going up dramatically in November. Up until November, President Joe Biden is releasing 1 million barrels from the Strategic Petroleum Reserves. This ends at the end of October. He's requesting another 10 million barrels, which is going to get us through the first week or so of November. OPEC Plus says that they're going to reduce their maximum production by 2 million barrels. Now, they're not producing as much as they should. So in reality, this is going to reduce another 800,000 to 1 million barrels a day. However, this is going to be the reduction for over a year by the next time they meet. So OPEC is not going to meet until the end of 2023. Plus, the primaries, right? We have the elections. The Republicans, if they win, they're not going to give a fizzle about gas. And if the Democrats get reelected, they're not going to give a fizzle about gas. So now, all of a sudden, nobody cares about gas. Nobody's removing the Strategic Petroleum Reserves. And in general, the entire world is going to have less gas production. Now, yes, the economy is definitely going to be slowing down. However, I believe that gas prices are going to keep going up. And as gas prices are going to keep going up, this is going to be detrimental to the health of inflation. And inflation is going to start going through the roof. This is at least my prediction. I think the next CPI report that we're going to have is going to be very, very bad. A lot worse than we think it's going to be. And then shit is really going to hit the fan. The next CPI report that we're getting is after the Federal Open Market Committee. Right now, the Federal Open Market Committee, if you go to the CME futures, there is now an 86% chance that it's going to be 75 basis points and only around a 13-14% chance that it's going to be 50 basis points. It is almost for certain that we will be having a 75 basis points rate hike, which is a super aggressive rate hike. And this is the worst that we've had in like 50 years. The question is, can our economy actually hold after we're getting these rate hikes? Unemployment is not running rampant. Unemployment is very low at 3.5%. It actually went from 3.7 to 3.5. If you read the FOMC meeting minutes, which I did earlier today in the live, they were so happy that unemployment went from 3.5 to 3.6 to 3.7, and now we went from 3.7 to 3.5. So what do you think is going to happen in the next FOMC meeting? And all the governors, all the board of governors are all being aggressive. They all saying that we need to raise the interest rates. I am very fearful that our economy is on the brink of collapse. And our shallow recession that officially we don't have a recession is going to now be a very deep recession. I thought we were going to get a recession, which we did, 2 negative quarters of GDP. Probably we have a third negative quarter of GDP. And then the economy was going to start recovering. Sometime in the second quarter of 2023, it was start. And sometime in the second half of 2023, earlier second half, we would start recovering. Now, I changed, shifted, and pivoted. And I believe that the recovery is actually going to be at the end of 2023, early 2024. Again, this is based on the data that I have in front of me. You see, we shot our load. We missed, and we're out of ammo. The Strategic Petroleum Reserves should have over 700 million barrels in there. Currently, we have like just a smidge over 400 million. This is supposed to be used for an emergency. Before Biden started taking it out, it's only really been used 2 or 3 times before, like for a hurricane and real emergencies. This is a big problem. And if you haven't noticed, there is a problem in our world. the geopolitical uncertainty in Russia, geopolitical uncertainty in China, there's a problem. We are closer to nuclear war than we have ever been since the Cuba Missile Crisis. The nuclear Cuba Missile Crisis. Guys, this is a very serious situation right now. Guys, this is from the Fed, okay? This is from the St. Louis Fed, and they're tracking personal savings accounts rates. Take a look at this. This is as of September 30th. The percentages that people had just over a year ago, they had around 9.5% of savings. Do you see what's happening right now? That number is around 3.5, 3.6%, which means people have less and less savings. Let me explain to you why people have less and less savings. People have less and less savings because they don't know how to cut corners. And the people that do know how to cut corners, sometimes you just can't cut enough. People are still spending galore. So what are they doing? They're spending their savings and they're racking up credit card payments. The problem is with those credit card payments, they sneak up on you. Those interest rates are going through the freaking roof. We're going to cover them in just a moment. We are going to go over mortgages in just a moment. Check this out. This is your personal savings account, okay? In blue is the personal savings account from a month ago, and in red is the current savings account. Do you see what's happening? September, savings account was high. 1 month later, it went down, so on and so forth. Do you see that the blue line keeps being higher than the line on the right? And if you look in the top corner, it says personal savings rate, vintage, 8/26/2022, and the one in red is 9/30/2022. Our personal savings account keeps going down. This is from the same website. Consumer loans, credit cards, and other revolving plans, all commercial banks. Guys, do you see this number? It is going through the freaking roof. This is for the last 5 years. As you can see, it was going up, 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 up. During the recession of COVID, it dropped. And look, it's going through the freaking roof. It is now higher than it was before the pandemic. This is a problem. This is that chart that I showed you the opposite, except right now, the savings, as you noticed, was going down, down, down. And this is actually incrementally going up, up, up. The blue is from a month ago, and the red is today, right? And you could see that it just keeps going up, 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 which means that the people have much more credit. They're spending much more credit. Their savings are going down, down, down. What's gonna start happening right now is there's gonna be a decrease in equity in people's real estate. I don't think people understand how much shit is gonna hit the fan. If you're already to the roof of credit and your savings is down, 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 can you just imagine what's about to happen? What shitstorm is about to happen if we keep raising rates, inflation's not going down. Guys, we're going to be on the cusp of a major depression or stagflation. This is extremely scary, and I'm not trying to fearmonger you. I'm just giving you the data. Whatever you do with this data is up to you. Let me show you some other data. This is the national mortgage rates. This is not the stated mortgage rates. This is the actual mortgage rates if you were to go get. A 30-year fixed mortgage right now is 7.69%. 7.69%. For every $100,000 that you are borrowing, you're going to be paying around $750. 1 year ago, you were paying 3%. You were paying something like $350. You are literally paying double for every $100,000. There is something called the 28% rule. So if you borrowed a loan on a $100,000 house, which doesn't exist, right? So the average house is $500,000, let's say, for example. You put 20% down, you're left with $400,000. A year ago, $400,000 at 3%, you were paying around $1,200. Today, for that same $100,000, you're going to be paying $2,400. There's a rule that says 28%. The 28% rule in real estate means that your payments for your mortgage cannot be more than 28% of your gross annual salary, which means to afford the same exact house, you would need to be making approximately an extra $5,000 a month. So if last year you could afford a house and you were making $100,000, now you would need to make $150,000, for example. That's a lot of money. That is a lot of freaking money. Shit is about to hit the fan. Let me show you the CPI report and show you what I was talking about earlier. CPI report. I want you guys to read this very, very carefully, okay? The increase were partly offset by a 4.9% decline in gasoline index. The food index continued to rise, increasing 0.8% over the month. The food and home index rose 0.7%. This is the most important sentence of this whole thing. The energy index fell 2.1% over the month as the gasoline index declined, but the natural gas and electricity indexes increased. This is the actual numbers over here. If you look at energy up 19.8, 19.7, 18.2, 58.1, 19.8, 15.5, 33.1, so on and so forth. The very interesting thing, if you go to fuel oil, you're going to see it was negative 1.2, negative 11, negative 5.9, and now it's just negative 2.7. So let's just recap. Inflation was barely coming down or at neutral. Now it's a little up, but let's say at neutral, with gasoline prices falling like a mofo. Now gasoline prices will no longer fall, they will go up. What's going to happen to inflation? You guys already know the answer. People have near record, higher than pandemic credit card spending, and at the same time, pre-pandemic lows of savings. So credits going up, interest payments going up, inflation's going up, which means interest is going to keep going up, and savings keeps getting diminished. The asset of real estate is an amazing asset. That's going to make you a lot of money, and it made a lot of money over the last couple of years, but that's going to shrink as well. Severely, severely shrink. I told you, in order to buy the same house that you bought last year, today you would need to be making around $50,000 more money on average. This is no joke. So inflation is going to go up, interest rates going to go up, mortgage rates going to go up, gas prices going to go up, utility prices already going up, inflation is going to keep going up, people are maxed out to the gills in debt, and they have near record low savings. Employment is still strong. That's going to go away. We are on the brink of an all-out FUBAR. This is absolutely mother effing terrible. Be careful out there. Try to make as much money as possible. Stop spending money. I honestly think this shit is going to be extremely nasty very, very soon. Thank you so much. Everybody have a great day. And try to hang in there. Please give me the like, share, and subscribes. And for me, I'm betting against the market. I just put up an options live trading session on my Patreon. And I make a quick $700 overnight. I bought options yesterday, I sold them this morning, made a quick $700. We'll see what's going to happen. None of this financial advice, purely entertainment and education. And if you are a business that wants to advertise, you can advertise right here. You can put your business over here. E-commerce business, crypto business, stock exchange, something like that. If you guys want to advertise, please feel free to contact me. Have a great day.